And to raise or not to raise interest rates, that is the question for the Bank of Korea as it weighs its options, taking into account the U.S. Federal Reserve's future course of action and the status quo on the domestic economic front. Our Finance Ministry correspondent Rae-hyun explains.
Concerns are rising as the interest rate difference between South Korea and the U.S. may expand as the U.S. signaled more increases later this year. With the Fed's decision to keep the base rate unchanged for now, the rate difference stays at 1.75 percentage points, an all-time high gap. However, with Fed officials revealing that rate hikes totaling 0.5 percentage points between now and the end of the year, the gap is expected to surpass 2 percentage points, even up to 2.25 percentage points, if South Korea's central bank continues to freeze the rate. This could spell crisis for South Korea with a weaker won against the U.S. dollar possible and with foreign capital outflow. Now it's up to the Bank of Korea to focus on taming anxiety by freezing the rate or increasing the base rate to prevent any uncertainties resulting from an exchange rate crisis. The head of the Bank of Korea, Lee Chang-yong, said previously that Korea will not mechanically respond to a rate difference, adding that more rate hikes may come in the near future. However, economic conditions in South Korea are making it difficult to raise base rates. The GDP growth rate in the first quarter of this year barely avoided a negative figure, while the trade deficit has been in the red for the 15 straight months. The BOK also already lowered its economic growth outlook from 1.6% to 1.4% amid China's weaker-than-expected reopening and the sluggish recovery of the chip sector. Meanwhile, South Korea's Finance Minister Chu Kyung-ho said during a meeting on Thursday that a rate freeze by the Fed was already expected by the market and the government.
Uncertainties remain as to how major countries will decide on their monetary policies. The government will keep watching for any uncertainties and closely monitor the market and strengthen the management of vulnerable sectors.
During the meeting, Chu also pledged to thoroughly manage the potential risk of project financing in real estate, as more rate hikes could trigger a crisis for non-banking financial companies as well as a complete financial crisis. He said related institutes are cooperating to monitor project financing firms around the clock. Rae-hyun, Arirang News.